It's May 1, popularly called Workers' Day. Good morning and welcome to Business Morning. I am BC Adebayo. International Workers' Day is marked annually every 1st of May to celebrate the working class and laborers across the world. Socialists and labor unions celebrate this day by organizing programs to improve wages and working conditions of the workforce. However, with COVID-19 here, the International Labour Organization warns that global job losses loom with countries imposing lockdowns. We'll talk more about that in the course of the program, but meantime, it's no longer news that the International Monetary Fund has approved $3.4 billion emergency funding for Nigeria, an amount termed the single biggest disbursements for any country yet with the coronavirus pandemic. However, it's important to understand the conditions under which the loan is being granted. And I'm being joined by the IMF Senior Resident Representative and Mission Chief for Nigeria, Mr. Amin Mati. Good morning, Mr. Mati. Thanks for speaking with us on Business Morning. Now, it's widely believed that one of the preconditions for accessing IMF facilities is that countries should have a unified exchange rate. However, some skeptics criticize the IMF that this is a one-size-fits-all therapy. In the context of the recently approved facility for Nigeria, how valid is this criticism?
Good morning to you, and thank you for having me on your show. Criticism is not valid at all. The rapid financing instrument that was granted to Nigeria was for emergency financial assistance to respond to the COVID-19. There was no preconditions to it. And let me add that there's also no precondition on what is needed for IMF programs in the sense that for an exchange rate regime, there are some countries that have an exchange regime that is more flexible. There are some that have a peg, and it really depends on country-specific circumstances. In this case, for Nigeria, we do believe a unified exchange rate is needed. More flexibility in the exchange rate is needed, but there was no precondition. And actually, if you look at it, the adjustment on the exchange rate had already happened before, when you had the official exchange rate that has moved from 305 to 360, and then you have the INE rate that has also moved forward.
But a unified exchange rate does not necessarily mean an equilibrium exchange rate. Is it possible to have a unified exchange rate which is misaligned from the economic fundamentals of the country?
Well, when you have a unified exchange rate, it means that you have one exchange rate. And in most countries, this is what we would recommend, having one exchange rate. The central bank has taken some welcome steps to that. There were several foreign exchange windows. They have all moved at a rate that is now at the IND rate. We still have a difference between the official rate at 360 and the IND rate that is at 385 today. Now, on your question specifically about a unified exchange rate, a unified rate should be market determined and reflect fundamentals. It's not always the case that a unified rate reflects fundamentals, and this is the reason why we are always talking about a market-determined exchange rate with usually the central bank, and in this case, this is what the Central Bank of Nigeria is saying we do, only intervening to smooth the exchange rate for large fluctuations.
Nigeria's fiscal gap due to the fall in oil price is estimated by many to be between $11 and $18 billion, yet the IMF is providing support for only $3.4 billion. Therefore, the fiscal and FX gap may still persist in spite of the IMF support. What, in your opinion, should Nigeria do to bridge this gap?
Well, IMF is doing many things. First of all, IMF is $3.4 billion, but the Nigerian authorities are also looking at financing from other international financial institutions, from the World Bank, African Development Bank, Islamic Development Bank, Africa Exim Bank. That will help fill some of the gap. They are also looking at balances from the special accounts and what can be used from the sovereign wealth fund. Now, one recommendation on what avenue that they are looking at and has just been approved earlier this week was the increase in the domestic borrowing limit. which is going to allow the government to issue more domestic debt to finance the budget. And why is that attractive? Because at the same time as we have central bank bills that are maturing, then the government can issue bonds to replace those bills without crowding out private sector credit. And the amount of liquidity is large. Remember, PFAs can no longer buy CBN bills, so the pension funds can no longer buy CBN bills, and those pension funds have quite a lot of liquidity available. So as their CBN bills are maturing, they can then replace that investment with buying government bond. And let me add that a lot of the government bond auctions have been very oversubscribed, and the domestic yields have been quite favorable and below inflation rate, even at longer maturity. So that will be a good option to finance the budget that we would also recommend.
Looking at Nigeria's debt service burden now, it's been growing astronomically and it's now believed to be above 80% of its revenues. Do you think that Nigeria is likely to be debt choked in the near to medium term? And if so, what are the IMF prescribed remedies?
Well, when you look at the debt in Nigeria, if you look at debt to GDP ratio, it's still below 30% of GDP, even at today's oil prices and today's fiscal situation. So going forward, one has to look at in terms of the interest payment to revenue ratio. That has increased a lot, and to reduce that burden and keep it low, this comes back to the recommendation that, and one of the priorities of the government, which is to increase revenue. And one of the plans of the ERGP is to increase revenue mobilization to about 15% of GDP. And as measures are being taken, and remember earlier this year, we had an important measure that was taken, which was the VAT rate increase. Those type of measures and broadening the expenses, increasing tax policy will help and use that.
We'll get back to Mr. Mati in just a moment. But okay, Mr. Mati is still hanging on there. So this loan facility is not meant for capital projects, but of course only to address the balance of payment constraints. But what are some of the tracking mechanisms that the IMF has put in place to ensure adequate utilization of this money?
Well, what happened? Let me clarify. This is IMF money is there to answer an urgent BOP need, but the money is also going to be online for the budget. So this is full budget support, $3.4 billion. This is going to be given to the central bank, online to the government, who's putting it in a special account, but it's also, this money is going to be spent on a lot on the health spending, on trying to provide emergency relief to businesses and others, and it's going to be tracked. The government has created special budget lines, or will create special budget lines to track it. It will report it in the Treasury portal that's already available today. There's going to be an audit of the procurement process with the listing of the beneficiaries awarded and some independent audit being done. So we think all these steps will be good steps in having the right governance arrangements to make sure that the funds that were given are used for their intended purposes.
That the IMF plans to conduct a due diligence exercise of the Central Bank of Nigeria. Tell us, what would it entail?
Oh, that is a safeguards assessment. Is an exercise that is done by the IMF or all central banks, given that going. We look at governance arrangements, the audit, and the different reserve management. All of those different facilities will be looked at part of that safeguards assessment, and we'll also be looking at the audit reports that were done.
In some countries now that have adopted the IMF programs, oftentimes public reactions have been that of social unrest and disturbances. At times that leads to political instability. can you assure the policymakers and the public that this new facility and conditions attached will not in any way lead to widespread unrest and public resentment?
Let me clarify that this is an IMF emergency support program that is there to help answer the COVID-19 pandemic crisis. There are no conditions. Let me also remind you that the IMF of today is not the IMF of the 1980s. This particular program, this particular facility does not go with an underlying IMF program, and the disbursement has already happened or will be happening today or has happened yesterday and will be coming in today. So the and the commitments made in the letter of intent looking funds are reform priorities that the government already has, and that has many of them are part of the economic recovery and growth plan.
The rate of inflation is approximately 13% and projected to increase to about 19% by the end of the year. But yet, the rate of interest on deposits and treasury bills is approximately 4%. What's the IMF's view on the interest rate structure in Nigeria and the current inflationary environment?
Well, I think inflation today has been contained. We have inflation that is still at 12.3% year on year, and the interest rate. I mean, I think you have a careful balance to look at. You have the demand shock, so you have a demand that has grown. We are showing an economy that will be contracting by 3.4%. We have a terms of trade shock that is severe, and you have therefore demand that has been reduced and has kept inflation relatively contained. We expected more of an increase because of the VAT rate increase that hasn't materialized yet, and that's the channel to look at with exchange rate has already moved. Even the pass-through from the exchange rate has not yet fully materialized. We do expect some pickup on the inflation for the year, and we think that the current stance is appropriate, and it's really a careful balancing act that the central bank will have to do. That will have to remain data dependent.
Mr. Mati, could you tell us what's your view of the current trade policy of the country? In what ways can this support the economic recovery efforts?
Sorry, this referring to what? I didn't hear that part.
I was asking what is your view of the current trade policy of Nigeria, and in what way do you think it actually helped the country's recovery efforts?
Yeah, sorry, trade policy.
Mr. Mati, if you can hear me, I was asking what is your view about the current trade policy of Nigeria?
Well, I think on the trade policy of Nigeria, if I understood your question, and our view is that the more openness and freer trade is actually needed. We have argued in the past that foreign exchange restrictions will create exposure and are not conducive to more trade, more growth, more long-term investment in Nigeria, which once the COVID-19 crisis passes, would be needed.
The IMF Senior Resident Representative and Mission Chief for Nigeria, Mr. Amin Mati, thanks for speaking with us on Business Morning.